Hello, Maverick traders. Welcome out to your currency recap, November 6th. Corey here with you. Let's jump into it. So today we're going to look at what market moving news is out there. We're going to take a look at commodities. I have a little bit of a 180 reversal in my commodity outlook recently. I'll touch on that more. We'll look at the broader markets, look at currencies, look at crypto. We'll look at all of these and then try to highlight our very best ideas for new trade opportunities. All right, so as we look at the markets, this is the way that I have the velocity and kind of the opportunistic look at it. Obviously, crypto, we've had that in the bullish list here last week. We have it again there this week. They're running higher, and if it ain't broke, don't fix it. Aussie and Kiwi. So I had a big change of opinion last week. I talked about you can watch last week's video, but I talked about this false breakdown in the S&P, this expectation that we move below support, but that we were going to springboard back above. Well, in fact, the equity market did exactly that. We had our best rally, our strongest rally of the entire year last week. So it was spot on, and Aussie and Kiwi have not disappointed. They have been very strong. They are risk-on currencies. I also have tended to like the euro, and I continue to do that. So I have those on the bullish list. On the bearish side, it's the defensive areas of the market. Swiss franc, US dollar, Japanese yen. These are areas that do better when there's less risk taking, when people want to be defensive and hunker down and, wait for the dust to settle. That's not this environment, not this past week. And we are traders, we are active, we are looking for opportunity. So as we look at things and how it's transpiring, for today, not a whole lot of volatility. Kiwi down, Swiss franc and some of those things bounce back a little bit today, but I don't think today a trend makes. Now, a little bit of a change. As I said, my commodity outlook is shifting, and I touched on this last week. I'll touch on it again. Oil looks heavy. It looks tired. Precious metals, I'm going to put that in the same camp. I actually think that gold, which has been struggling around this 2,000 an ounce, I think it's going to back off of there. It looks to me like people kind of ran it into that level, and now we're going to have maybe a pretty good size sell-off. Now, I don't think it's dramatic in the tune. I don't think gold's going to 1,000 an ounce or something too chaotic, but can it go from this 2,000 back to 1,900, back to 1,850 in the short term? I do think that commodities look weak, and as I said last week, energy rolling over is very good for the economy, very good for the broader markets, and energy is just such a small sector when you look at the broader markets. So it's good news for equities. I think equities are going to continue to work their way higher for the foreseeable future, and that means risk on. But you want to be out of the defensive areas. You want to be shorting them. You want to be shorting precious metals and energy, which again are a little bit more defensive. Gold tends to glitter when there's chaos and whatnot. Well, that's not this environment, not in the short term. ChatGPT rolled out a new version of AI called GPT-4 Turbo. I don't know about the name, but AI is going to continue to evolve, and ChatGPT is one of those companies right there at the forefront. Now, for today, as I said, little bit of a bounce back for US dollar or Swiss franc. Euro continues to consolidate. Kiwi gave back some recent gains, but these are all very minimal moves. I see them as choppiness within the directional trends. Now, crypto up about 2%. Gold gave back some gains, and I think it continues. My guess is that, again, where we've been struggling around 2,000 an ounce for gold, we're going to head back to 1,900 or so. We're going to back and fill. before we eventually go up and through 2000, but not here, not in the short term. That's not the way it looks to be trading. Bitcoin, Ethereum, Litecoin, those are your outperformers. Bitcoin Cash was up 2% today, but really its chart has been left behind. So Bitcoin Cash, I don't know if I understand the concept behind that, why you would want to mingle Bitcoin with US dollar exposure and whatnot. But anyway, make a long story short, it is being left behind because, again, it's more defensive. It's like a crypto defensive area. It has a certain exposure to the US dollar. If you just want volatility and you want beta, you want that directional move, you go after a Litecoin or some of these other assets. And that's certainly been the case this last while. So some changes in the broader markets. We've moved above the 20. We're a little above the 50. But my expectation for this market, just like we talked about last week, really one of my best trading calls of the year, talking about how I expected that this was a false breakdown and that it would come springing back above. And sure enough, that's what we've done. Now we're back up to these highs. Now, here's kind of how I envision this going. We back up again and people say, uh-oh, here we go again. You know, probably an ugly day mixed in there or whatever. Some bad news hits the market, whatever. And everybody goes, here we go again. We're on the precipice of a plunge back. We're going to take out those lows. And all it is a little pullback that gets gobbled up, and then we go up and through resistance. That would be my anticipation for how this goes. I still think there's more upside to go, more risk on environment happening. Now, as we look at this week, we've got the RBA coming out with their rate statement tonight into Tuesday morning. We've got Fed Chair Powell speaking this week on Wednesday and on Thursday. And we've got consumer sentiment. But these are obviously taking direction from the Fed, and where their next phase is going is always what the markets are looking at. And the Fed Chair Powell was somewhat dovish, well, they've already shown the interest rate expectations have come down dramatically the past couple of months. So markets saying, hey, the Fed's on hold, that's good. I think it's good in the short term, and we're traders, we trade the short term, but I don't think it's good in the long term. I think that the Fed's going to have to re-engage and hike rates, and I think that's going to be a 2024 story much more than it going into the end of this year. So we probably have the rest of November, December as kind of a calm period. Not a lot of fear, not a lot of panic and whatnot. But as you get into 2024, I don't think inflation's done. I don't think some of the issues are worked out. And I expect a couple more rate hikes, not in the short term, but in the intermediate term. So that's a 2024 story. And will we get risk off, and will that hammer assets? I think that's quite possible. Now, as areas of interest, what I think is transpiring is we're in the process of having formed a bottom. So what happens? Well, you'll probably zig and zag. There might be a little pullback here, but I think we work our way higher and then maybe pull back and work our way higher. I think the Kiwi is on its way back up to those prior highs from October. Look at long Kiwi, long Aussie, those types of areas of interest make sense to me. Just pure from a risk perspective. Just in the short term, we're going to look to buy the dips. The one that actually looks very compelling to me, it's consolidating right now, and it really hasn't done much of anything for the past 2 weeks, just kind of wedging there. But from these volatility compressions often come explosive moves, and I suspect the euro's going to do that on the upside. So look up here and think about how you're going to capture it, because in my opinion, my estimation, that's where we're headed. So I still like euro as a long. I still like buying the euro, shorting whatever against it. You could short the US dollar. You could even short the Swiss franc. You could short a variety of things against the euro as an underperformer. I think the euro is going to continue to work its way higher, and we might have some explosive days to the upside in the euro as it works its way back up to that resistance and frankly probably up and through there. Continue to look for opportunities. I'm like we talked about last week, I flipped a 180 really and now have a more bearish outlook on energy, a more bearish outlook on gold, a more bullish outlook on equities, a more bullish outlook on risk on currencies. And that change last week was pivotal. I tried to emphasize that point, tried to pound the table, and I don't think it's done yet. I don't think it's just a 1 week. I think it's going to play out for a couple of weeks. So more upside expectations. Continue to look for those opportunities, and we'll be staying busy all week with trading room this weekend and market updates throughout the week. Thanks everyone for joining me. Have a great week ahead. We'll see you next time.